Hey everyone, welcome back to Corporate Decoder, the place where we decode the fascinating world of corporate filings. And today we are diving deep into ARB IOT Group Ltd's latest annual report. And let me tell you, the numbers are telling quite a story of rapid expansion and some significant challenges. If you love getting the real scoop on what companies are doing, make sure you are subscribed. And hey, want to chat more about these filings and get exclusive insights, join our Discord community. Link is in the description below. So Accession Number Group Ltd is presenting its annual report. And right off the bat, they are telling us they are an annual report, not a transition report or anything else that might mean they are in a bit of a transition themselves. They are reporting for the fiscal year ended the 30th of June 2025. This is a company that is really trying to establish itself in the Internet of Things space. Now let's get straight to the heart of it, the money. Their revenue has seen a massive jump. For the year ended the 30th of June 2025, revenue shot up to 197.3 million ringgits, which is about 46.8 million US dollars. That is a huge 239% increase compared to the previous year. Wow. This is primarily driven by sales of IoT vending machines and IoT network hardware. It shows they are selling more products and getting more customers for their smart building solutions too, thanks to things like AI Wi-Fi optimization. But here is where it gets interesting. Their cost of sales also exploded even faster than revenue. It went up by 162% to 205.5 million ringgits, or about 48.7 million US dollars. This means their actual profit margin is shrinking, and in fact, they ended up with a gross loss of 8.1 million ringgits for 2025. That is a big red flag. They are selling more, but it is costing them more to do it, and they are actually losing money on the goods they sell. And then we see these massive figures for impairment losses. For the year ended the 30th of June 2025, they recorded impairment losses of almost 27 million ringgits. That is about 6.3 million US dollars. Most of this, nearly 16 million ringgits, is on goodwill and intangible assets. When a company writes down goodwill, it often means that an acquisition they made is not performing as well as they thought it would. They are basically admitting that some of the value they paid for is now gone. They also had to write down property, plant, and equipment by about 7 million ringgits. This is tough, and it means their older investments are not holding their value. All of this adds up to a significant loss for the year ended the 30th of June 2025. Their total comprehensive loss was 71.4 million ringgits, which translates to about 16.9 million US dollars. This is a widening loss compared to the previous year. This is not a company that is making money right now. They sold more, yes, but the costs and losses are currently outweighing the revenue. Let's look at their assets, their trade receivables. That is the money customers owe them, stands at 41.8 million ringgits. That is about 9.9 million US dollars. They do give some customers quite a long time to pay, up to 210 days for some of their large clients, while they say they collect these receivables. It does tie up a lot of cash. Their cash and bank balances are sitting at 32.6 million ringgits, which is about 7.7 million US dollars. This is down from the previous year, and given their losses, this is a key figure to watch. They say they believe they have enough cash to meet their needs for the next year, but if they continue to lose money at this rate, they will need more funding. It is also interesting to note their employee situation. As of the 30th of June 2025, they had only 9 full-time employees. This is a big drop from 53 employees in 2023. They have clearly been restructuring, relying heavily on outsourcing vendors to keep their operations running. This can be cost-effective, but it also means less direct control over the work. Now, diving into who owns what, Lu Kok Leong, who is the CEO and chairman, directly owns about 27.1% of the company. Then there is UK 1SDN, BHD, which is controlled by Mr. Leong and his wife, holding another 18.5%. This concentration of ownership means that a few people have a lot of say in how the company is run, which can be good for quick decisions, but also carries risks if their interests do not align with other shareholders. On the governance front, they have a code of ethics and have established an audit committee, a compensation committee, and a nominating and corporate governance committee. This is standard practice for publicly traded companies and shows they are trying to follow good corporate governance rules. Kevin Kor Chin Mung is highlighted as their audit committee financial expert, which is a good sign for financial oversight. It is worth noting that their shares trade on the Nasdaq capital market under the symbol ARB. They have had some challenges maintaining the minimum bid price, even resorting to a reverse stock split to stay listed. This is often a sign of a company struggling to impress investors with its stock performance, and it can make it harder to raise capital. Overall, Accession Number IoT Group Ltd is in a high growth phase, expanding rapidly into new areas like AI servers and smart farming. The revenue numbers look impressive, but the underlying profitability is deeply concerning. They are spending a lot to grow, and it is not translating into profit yet. The massive impairment losses suggest that some of their past investments haven't paid off, and the shrinking employee count through outsourcing raises questions about long-term control and quality. Their reliance on a few major customers and the significant ownership concentration are also points to consider. The company is trying to navigate a competitive and evolving tech landscape, and while they are making moves, the financial results show they are still a long way from being consistently profitable. It is a high-risk, potentially high-reward situation, but right now the risks seem to be outweighing the rewards based on these numbers. That is our take on ARB IoT Group Ltd's annual report. What do you think about their aggressive growth strategy and those widening losses? Let us know in the comments below. If you found this breakdown helpful, please hit that like button. It really helps the channel, and make sure you subscribe for more deep dives into the corporate world. And remember, join our Discord community for more exclusive content and discussions. Thanks for watching. See you next time.